Hello, welcome to our video presentation entitled Accounting and Business. Next is the table of contents or the subtopics that we will discuss. 1. What is accounting and its equations? Accounting versus bookkeeping. Second, accounting cycle. Third, financial statements. Fourth, GAAP and cash versus accrual. Fifth, different types of accounting. What an accountant does. 6. What is business? Why accounting matters for your business. Before we start our real topic, here are a brief trivia. History of accounting. 18,000 to 5000 BC, earliest evidence of accounting language comes from Mesopotamian civilization. Before 2000 BC, bookkeepers most likely emerged while society is still under a barter system. In 1040s, single-entry bookkeeping is the standard. 1494, Italian monk Luca Pacioli published the framework for modern. 1887, the American Association of Public Accountants was established. 1896, the accountant profession is formally recognized. Establishments of the professional title of Certified Public Accountant. 1913, the U.S. begins charging income tax to fund the upcoming World War and the needs for accounts skyrockets. 1952, IBM released its first large computer, and the accountants are among the first to use them. In present days, QuickBook is amongst the most popular accounting software. The technology changed the accounting today. Next is the father of accounting, which is Luca Pacioli. He was a Franciscan friar who was known as the father of accounting, born in 1446 in San Sepolcro, what is now called Northern Italy, where he also received his early education, known as Abaco education. It is believed that he died in the same town on 19 June 1517. First person to publish dated materials on the double entry system of accounting. The knowledge he got was focused on knowledge required by merchants. It is said that Luca Pacioli published works for the double entry accounting system based on the procedure used by Venetian merchants during the Italian Renaissance. His documentation includes journals, ledgers, year-end closing dates, trial balance, cost accounting, accounting ethics, and extensive work on the double entry accounting system. Luca Pacioli is famously quoted as saying that a person should not go to sleep at night until the debits equals the credits. Now let's start our real topic. What is accounting? Accounting is more than just the act of keeping a list of debits and credits. It is the language of business and by extension of all things financial. Accounting is how your business records organize and understand its financial information. Imagine that accounting as a big machines that you put a raw financial information into records of all your business transactions like taxes, reduction, etc. that tells you a story about financial states of your business. Accounting is how you get a clear picture of your financial position. It tells you whether you're making a profit, what your cash flow is, what the current value of your company's assets and liabilities is, and which part of your business are actually making money. Accounting is the process of recording financial transactions pertaining to a business. In short, we can say that accounting is the process of identifying, measuring, and communicating economic information to make decisions. It also an art of recording, classifying, and summarizing financial transactions and events. Purpose of accounting, it plays a vital role in running a business because it helps you track incomes and expenditures, ensures that statutory compliance, and provide investors, managements, and governments with quantitative financial information which can be used in making business. Moreover, in these slides, you can read the following experts and organizations that have different views and definitions of accounting. There is according to A.W. Johnson's and according to American Institute of Certified Public Accountants, And lastly, according to American Accounting Association, accounting equation is a basic principle of accounting and a fundamental elements of the balance sheets. The accounting equation states that a company's total assets are equal to the sum of its liabilities and its shareholders' equity. The straightforward relationship between asset, liabilities, and equity is considered to be the foundation of the double entry account. Here are some examples, which is if the a asset is unknown, the liability is unknown, or the equity is known. It is shown in my example. Next is accounting versus bookkeeping. Accounting and bookkeeping are both part of the same process, keeping your financial records in order. Bookkeeping is more concerned with recording everyday financial transactions and operations, while accounting puts the financial data to good use through analysis and strategy and tax planning. In simplest of terms, bookkeeping is responsible for the recording of financial transactions, whereas accounting is responsible for interpreting, classifying, analyzing, reporting, and summarizing the financial data. Both accounting and bookkeeping deal with financial data, require basic accounting knowledge, and classify and generate reports using the financial transaction. Bookkeeping and accounting are different in terms of definitions, decision making, objectives, preparation of financial statements, skills required, analysis, types. Moreover, bookkeepers are required to be accurate in their work and knowledgeable about financial topics. Bookkeepers' work is usually overseen by an accountant, and accountants need have a sufficient experience and education which can obtain a title of a certified public accountant.
The accounting cycle. An accounting cycle is the collective process of identifying, analyzing, and recording the accounting events of a company. The series of steps begins when a transaction occurs and ends with its inclusion in the financial statements. Accounting begins with recording transactions, business transactions. Any activity or event that involves your business's money need to be put into your company's general ledger. Recording business transactions this way is part of bookkeeping. So what bookkeeping is? Bookkeeping is a first step of what accountants call the accounting cycle, a process designed to take in transaction data and spit out accurate and consistent financial reports. The accounting cycle has 6 major steps. So the first one is the analyze and record transactions. Collect any invoices, bank or credit statements, and receipts from business transactions. Second is the post journal entries to the ledger. It's time to take those documents and start making journal entries for your transactions. Journal entries includes 3 components of a transaction. First is when it happened. Second is what it was for. And third is how much it was. Some businesses use single entry accounting where only the expense or revenue is entered. But more common is double entry accounting, which records each transaction in 2 accounts, where money is come from and where it is going. Third, prepare an adjusted trial balance. At the end of a reporting period, list all of your business's accounts and figure out their balances. Fourth is prepare adjusting entries at the end of the period. When you need to update entries you've already made, you prepare adjusting entries. For example, if a client is late on paying an invoice and you offer a 5% discount to help them pay, you would enter the discount as an adjusting entry as opposed to changing the entry you've already made. Fifth is prepare an adjusted trial balance. After entering and adjusting entries, you're left with an adjusted trial balance. This information is now ready to be turned into financial statements. So lastly is the prepare financial statements. So finally, all the information you've collected is converted into your financial statements. This final step includes summarizing all your financial information into succinct reports for easy review.
Good day everyone. Today I'll discuss what is financial statements. So, financial statements are reports that summarize how your business is doing financially. And they tell you also where your money is going, where it's coming from, and how much you've got to work with. So, there are three main financial statements. So, first, income statement. The second is the balance sheets. The third is the cash flow statements. So, the income statement is your business profits and losses, and the balance sheets also is your assets, liabilities, and equity. And the cash flow statements also your business incoming and outgoing money. So, first, I'll discuss what is income statement. So, income statements or profit and loss account is one of the financial statement of a company and shows the company's revenues and expenses during a particular period. And it indicates how the revenues are transformed into net income or net profit. And the second is the balance sheet. So, what is balance sheet? The balance sheet is a summary of financial balances of an individual or organization, whether it be a sole proprietorship, a business partnership, a corporation, private limited company, or other organization such as government or not-profit for entity. So the last one is the cash flow statement. So what is cash flow statement? Cash flow statement is a financial statement that summarizes the movement of cash and cash equivalents that come in and go out of a company. So that's all. Thank you.
Good day, everyone. I'm Furnace Moani, and today we're going to talk about General Accepted Accounting Principles, or GAAP. Every company is different, but in order to make accurate financial comparison between companies, we need a common language to describe each of them. That's what Generally Accepted Accounting Principles, or GAAP, are. Generally Accepted Accounting Principles is a series of standards and procedures that accountants at all companies must adhere to when preparing financial statements. A non-governmental body called Financial Accounting Standards Board sets the GAAP. While there are no laws enforcing these standards, most lenders and business partners in the United States will require that you adhere to GAAP. If you're in Canada, you'll use a different system called International Financial Reporting Standards, or IFRS. So, on the next topic to debate that we're going to talk is cash versus accrual. You can do your business accounting on cash or accrual basis. The difference between the two comes down to timing. Cash basis is the most basic accounting. On a cash basis, you only record transactions when money changes hands. If you receive an invoice on the 10th but don't pay it until the 15th, the transaction is recorded on the 15th. With accrual basis, you record transaction twice, when they occur and when they are paid. For the invoice above, you record the expense on the 10th and the payment on the 15th as two separate transactions. The method you use depends on what you need from your business financial. Cash basis is simpler and easier to stay on top of, while accrual offers greater insights for more detail-oriented business owners. Most small businesses have more basic accounting needs, which means cash basis is often the right fit.
Good day, everyone. I am Regina Cuyos, and my topics are what are the types of accounting and what does an accountant do. But before we tackle on those topics, let us have first some recap on what an accounting is. So, accounting is how your business records, organizes, and understands its financial information. It is how you get a clear picture of your financial position. It tells you whether or not you're making a profit, what your cash flow is, and what's the current value of your company's assets and liabilities are, and which part of your business is making money. So let's go on to my next topic, which talks about the types of accounting. So there are several types of accounting that range from auditing to the preparation of tax returns. So, namely, they are financial accounting, public accounting, government accounting, forensic accounting, management accounting, tax accounting, and internal auditing. And accountants tend to specialize in one of these fields, which leads to different career tracks. So, first type of accounting is the financial accounting. Those in the financial accounting field are concerned with the aggregation of financial information into external reports. Financial accounting requires detailed knowledge of the accounting framework used by the reader of a company's financial statements, such as the Generally Accepted Accounting Principles or the GAAP, or International Financing Reporting Standards or the IFRS. Or if a company is publicly held, it requires a knowledge of the standards issued by the government entity responsible for public company reporting in a specific country, such as the Securities and Exchange Commission in the United States. There are several career tracks involved in financial accounting. There is a specialty in external reporting, which usually involves a detailed knowledge of accounting standards. And there is also the controller track, which requires a combined knowledge of financial and management accounting. Second type of accounting is the public accounting. Those in the public accounting field investigate the financial statements and supporting accounting systems of client companies to provide assurance that the financial statements assembled by clients fairly present their financial results and financial position. This field requires excellent knowledge of the relevant accounting framework, as well as inquiring personality that can delve into client systems as needed. The career track here is to progress through various audit staff positions to become an audit partner. Third type of accounting is the government accounting. So those in the government accounting field use a unique accounting framework to create and manage funds from which cash is disbursed to pay for a number of expenditures related to the provision of services by a government entity. Government accounting requires such a different skill set that accountants tend to specialize within this area for their entire careers. The fourth type of accounting is the forensic accounting. So, those in the forensic accounting field are involved in the reconstruction of financial information when a complete set of financial records is not available. This skill set can be used to reconstruct the records of a destroyed business, to reconstruct fraudulent records, to convert cash based accounting records to the accrual basis, and so forth. This career tends to attract auditors. It is usually a consulting position since few businesses require the services of a full time forensic accountant. Those in this field are more likely to be involved in the insurance industry, legal support, or within a specialty practice of an audit firm. Fifth type of accounting is the management accounting. So those in the management accounting field are concerned with the process of accumulating accounting information for internal operational reporting. It includes such areas as cost accounting and target costing. A career track in this area can eventually lead to the controller position or can diverge into a number of specialty positions such as cost accountant, billing clerk, payables clerk, and payroll clerk. Sixth type of accounting is the tax accounting. Those in the tax accounting field are concerned with the proper compliance with tax regulations, tax filings, and tax planning to reduce a company's tax burden in the future. There are multiple tax specialties tracking toward the tax manager position. The seventh or the last type of accounting is the internal auditing. Those in the internal auditing field are concerned with the examination of a company's systems and transactions to spot control weaknesses, fraud, waste, and mismanagement, and the reporting of these findings to management. The career track progresses from various internal auditor positions to the manager of internal audit. There are specialties available such as the information systems auditor and the environmental auditor. So my next topic talks about the job of an accountant or what an accountant does. But first, let us define on what accountant is. So an accountant is a person who records business transactions on behalf of an organization, reports on company performance to management, and issues financial statements. And accountants do tax and compliance work. We all know that, but the best ones do so much more. So, here are 14 things you didn't know an accountant could do. So, accountants do more than what we think. They can give us strategic advice and come up with clever ways to save money or boost revenue. And they also remove or automate administrative tasks that distract us from our core business. So, get an accountant and run your business with more clarity and confidence. So, first thing that an accountant could do is to launch a startup. So, starting a new business can be exhilarating, but it takes more than a good idea. You need to know it will make money, and you need to convince investors and lenders of the same thing. An accountant can do that for you. They'll help test your idea, identify your startup and operating costs, and create credible revenue forecasts. They also know which lenders are playing ball at any one time, so you can approach the right people for finance. Plus, they'll work on your pitch, so you're ready to impress those lenders. So, the second thing that an accountant could do is to help you with business strategy. So, there are so many moving parts in a business. Sometimes it's hard to know where to focus. Accountants can help you figure out what's important. They'll work with you to set goals, personal, professional, and financial, then give you tools to measure your progress. You'll end up with a set of key performance indicators or the KPIs that tell you how your business is doing. If you have accounting software, your accountant will set up dashboards that allow you to check your KPIs at any time of the day or night. And if things aren't going as planned, what does an accountant do then? They'll help you troubleshoot the issues, test solutions, and reset your KPIs as needed. Third thing that accountant can do is to fix your cash flow. So many profitable businesses fail because they run out of money at the wrong time and can't afford to pay suppliers or staff. Even a highly active business won't last long if payments are slow to come in, right? Or expenditure is too high. Accountants know that revenue ebbs and flows, and that costs do the same. They'll help you predict the effect on cash flow and come up with strategies to manage the situation. They'll organize cash reserves and come up with a spending plan that ensures there's always money in the bank. It will make payday less stressful, supplier relations easier, and sleep deeper. Fourth is that accountants listen and supports you. So being in business is tough. It can be lonely too. When things seem too hard and you start thinking about the cozy 9 to 5 you left behind, a top accountant can keep your head in the game. They know how much your business means to you. They can reassure and reset you on your journey. And they'll help you cope with stress by breaking down big business problems into manageable parts. Giving moral support is an important part of what accountants do. Fifth, accountants manage your debt. There's good debt and bad debt. Your accountant can help you tell one from the other. They'll find the least expensive borrowing strategies for your business with the right mix of repayment flexibility and low interest. If you need refinancing, they'll take care of that too. Accountants will also advise when spare cash should be used to pay back loans and when it should be reinvested in the business. They'll do that by considering the numbers behind your business and looking at how your debt's structured to develop a specific strategy for you. It's not just blanket advice. Six is to deal with unpaid invoices. So, unpaid invoices are a fact of business. Chasing those debtors is a distraction you don't need, but you can't afford to ignore the problem. Your accountant can take that headache away. They can set up invoice systems that send automatic reminders to customers when their bill is due and or overdue. Some accountants will even call businesses that don't respond to emails. If invoices remain unpaid after this, your accountant can arrange invoice financing, where a business will buy your unpaid invoices from you and chase the payment themselves. Seventh is to write and pitch loan applications. Applying for a loan is both an art and a science. A good accountant will do more than just pull together your numbers. They can help you craft a compelling story. Lenders obviously need to see solid financials and credible forecasts, but that's just the beginning. An accountant will tie it all together in a presentation that sells the wider vision for your business. There won't be any spreadsheets. You'll be armed with graphs and charts that visualize the numbers, allowing your lender to literally see the opportunity, and they'll use powerful forecasting tools that loan officers trust. Is budget smartly. So, detailed budgeting can eat up a lot of your time and energy. As a result, many businesses end up working off a vague set of numbers that are full of assumptions and estimates. Your accountant can help you produce a rigorous, accurate budget that gives you real confidence. You'll know the real cost of doing business. You'll know how much money you can reinvest, and you'll know what you can pay for yourself. Ninth is accountants set up your cloud accounting software. So your accountant will automate a lot of your business accounting so that sales and expense data flows directly into your accounts. They'll also set you up with invoicing systems that tell you what's been paid and what hasn't. Smart software will even send reminder emails to clients who haven't paid so you don't have to. There are dozens of other automated systems they can implement for you, such as cash flow dashboards, so you always know where you stand, or the KPI tracking, so you can track overall business performance 24/7, and the automated accounts payable, so you're always on top of expenses. And the last one is the mobile accounting apps that allow you to manage your finances from the road. 11th, accountants help you manage inventory. So, do you spend a lot on storage or lose money writing off obsolete or damaged goods? Or do you sometimes lose revenue because you run out of inventory? Smart inventory management is critical to doing good business. Your accountant will identify the cost of holding inventory and come up with strategies to save some of that money. Plus, they'll review your sales data to help predict inventory needs so you can place accurate orders. They can even set up software that tracks inventory levels and auto orders items as they run low. 13th is to unlock the power of technology. So, smart business software can automate a lot of the things you do manually. An accountant can take away those distractions by setting up affordable software for things like staff scheduling and time recording, point of sale, taking payments, customer relationship management, invoicing, and payroll. So, this is one of the most important things an accountant can do for you. Automating business processes takes away pain, lowers costs, and ensures everything runs smoothly. Just make sure you find a tech savvy accountant that knows about business apps.
Hi, this is Lara Lauren, and the next topic is what is business and why accounting matters to your business. The term business refers to an organization or enterprising entity engaged in commercial, industrial, or professional activities. Business can be for-profit entities or they can be non-profit organizations that operate to fulfill a charitable mission or further a social cause. Businesses range in scale from sole proprietorships to international corporations and can range in size from small to large. The term business can also be used to define the efforts and activities of individuals to produce and sell goods and services for profit. Now, why accounting matters for your business? First, accounting helps you plan for your growth. Every great journey begins with a roadmap. When you're planning your company's growth, it's essential to set goals. Keeping up with your accounting helps you to stay on top of your business finances. That information is essential to assess how quickly your business is developing and guide future decision making. Without accurate reporting, you won't have the full financial picture. Second, accounting is essential for securing a loan. Up-to-date financial statements are essential if you want to fund your small business with a loan. If you want to apply for a business loan through one of the big banks, you need to provide on average 3 years of financial statements plus a 1-year cash flow projection. It's virtually impossible to deliver any of these if you don't have an accounting system in place. Next, you need accounting to attract investors or sell your business. You may not be planning to court investors or sell your business right now, but it's a good idea to leave your options open. And the best way to do that is to put a proper accounting system in place now. Potential investors, stakeholders, or buyers will expect accounting records read by a CPA or certified public accountant that prove your business is profitable and on track for growth. Accounting helps you get paid. When a customer owes you money, it appears as accounts receivable, or ER, on your balance sheet, which is generated automatically by your accounting software or manually by you or your accountant. The balance sheet tells you how much of your ER you have already pocketed during the month and how much is still outstanding. By referring to your balance sheet, you can track how effectively you're collecting payments. Next, accounting helps you to stay on top of your debts. If your business owes debts to a variety of sources, like credit cards, loan, and accounts payable, you'll have to jump into multiple accounts to check what you're left owing. The balance sheet shows everything you owe in one place. It also shows all your bank accounts balances so you can reference both at the same time. It's the perfect report to review to make sure you have the cash available to tend to your debts and plan future payments. Accounting helps you pay the right amount of taxes. If you don't pay your tax bill in full, the BIR will fine you. But they won't give you a gold star for paying too much. You can tell you're paying too much in taxes if your business consistently receives large tax refunds. Remember, a tax refund isn't free cash from the BIR. It's money you have overpaid the government that you could have used to invest in your business instead. Refunds are often the result of miscalculated quarterly estimated tax payments. To calculate quarterly estimated tax payments accurately, you need to predict your income. It's almost impossible to do so without reliable financial records produced through accurate accounting. Those are some important reasons why accounting matters to business. Now I will leave you with a quote from Warren. It says, "Accounting is the language of business. If you can't speak the language, it's difficult to win the game."